Dear investors, welcome to the September and October monthly roundup video. The markets have gone up almost 4 to 5% in the past 2 months. Interestingly, the earnings of Nifty 100 companies have gone up 2.4% in the April to June quarter, which was 2% in the January to March quarter. The inflation for the month of September is still down at 1.5%, and RBI recently revised the growth forecast for India GDP to 6.8% from 6.5%. Clearly, after the rate cuts by RBI this year, the GST rate cuts, and the income tax cuts by the Finance Ministry, things are looking optimistic regarding the economy coming back to an upward trajectory. Goldman Sachs upgraded India to overweight category and expects Nifty to rise 14% by 2026 year end. The only spoil sport is US President Donald Trump and his erratic policies, which are changing as fast as they come. The tariffs are being renegotiated. Let's see where that trend turns. Also, after the recent rate cut in October 25 of 0.25% by the Federal Reserve, they have gone into a wait and watch mood. So that is creating doubt regarding US economic growth, which can affect emerging markets. A word of caution: economic growth is not a switch that you can turn on and off. Whatever policies the government takes, there are second order, third order impacts of those, and a lag effect for the policies to influence earnings of the companies and thereby economic growth. Please keep that in mind always when you are investing. Patience and a very long term investment horizon always helps. Otherwise, bunny hopping from this asset class to that asset class, thinking that gold has outperformed this year, so let's move from equities to gold. Small caps have underperformed this year, let's move from small cap to large caps. US market has performed better, so let's buy foreign funds. This kind of approach is a sure shot recipe for disaster in your investing life cycle and finances as well. On asset classes, one question I have been asked more often in the past 2 months is whether we should invest in gold and diversify our portfolio a bit. There are the variations to these questions, like gold has risen 50% in the past 1 year. Should we invest in gold now? And so on. When I get questions like this, my approach is always to look at the past data and find some correlations among different asset classes to see how to deal with the current situation. First of all, gold or silver are commodities. They have high emotional and transactional value but are not good investment options. Three important reasons why gold can't be considered as investment. First, it doesn't produce anything in itself, rather, its value depends on the demand supply factor and fear mongering in the world at large. Second, it acts as a hedge for countries that deal with foreign currencies, especially during the times of political crisis, war, recessions, etc. Third, the price of gold or silver depends upon many other factors like dollar rate movement, crude oil prices, interest rates, share market movements, etc., which are very difficult to ascertain. Hence, it's difficult to know when to buy or sell them. The table on your screen depicts a point to point comparison of gold and BSE Sensex returns across various time periods in the past 33 years. It clearly shows that except for the 2018 to 25 time period, in all other time periods, Sensex has given better returns than gold. I am not surprised with this finding because Sensex returns are directly linked to the company earnings and GDP, whereas gold is not linked that way. Hence, over long term, gold is going to underperform equities as an asset class. As on November 10, 2025, 10 grams of 24 karat gold is priced at 1,20,000 and Sensex is at roughly 84,000. In my opinion, Sensex is going to be 6 lakhs long before gold becomes 6 lakhs. Any day, I would bet my chips on equities rather than gold or silver. Does that mean that one should never buy gold or silver? It's not like that. For one specific reason, an investor can buy gold or silver. Firstly, always buy gold or silver in digital form, like digital gold or silver ETFs or gold mutual funds, etc. Secondly, the only time to buy gold or silver is if you anticipate that after 5, 10, 15 years you'd need to buy gold or silver jewelry for your loved ones for marriage or any other ceremonies, as it has very high emotional value. By buying digital gold, you'd be saved from the hassle of bank lockers and also save a lot on the making charges of gold jewelry. At the same time, you'd be able to hedge the price so that in future any price increase in gold or silver won't affect the amount of gold that you want to give to your loved ones. Other than that, I don't think there is any sane reason for an investor to buy gold or silver and diversify their investment, not diversify. If you are a trader trying to make a quick buck from the price change in gold or silver, then it's your personal choice. I don't trade, nor do I encourage people to trade in commodities or equities, as they can be very risky and detrimental to your overall return in the long term. Hope this video has been useful. Thank you. Happy investing.